Welcome back to this fingraphs.com market overview in partnership with Dukascopy TV. My name is Jean-Francois Owczarczak and I'm Managing Director of fingraphs.com. 2 weeks ago when we were here, we were seeing a continuation of the current trends. That is down for euro-dollar, up for dollar-yen, down for gold and up for equities. We'll look at these again this week and consider the perspective over the next 2 weeks. Let's first turn to euro-dollar. This is an investor's view of euro-dollar. It combines a weekly chart, or 1 point per week, for the perspective over the next few quarters, a daily chart, or 1 point per day, for the perspective over the next few months, and an hourly chart, or 1 point per hour, for the perspective over the next few weeks. The 3D market positioning box helps you get a first opinion. At the moment, all three trends are in a bear, or heading down, and the message says potential continuous downtrend. Now let's focus on the weekly chart, and this weekly chart is still in a bear. The trend is hence still heading down, and the target projections still give us a bit of an opportunity here down to parity over the next quarter. The risk index, which was well oversold in early 2015, has since rebounded and still needs to go back into the oversold area to mark a bottom. So at the moment, the weekly chart is still heading lower. The daily chart is in a similar situation. It is also in a potential bear trend, and its targets do also lead us between 102 and 97 over the next few months. There's little time left, but the potential is still there. We're not in oversold position yet, so this move is probably not over. Finally, the hourly chart is now looking at impulsive 2 targets, so almost more extended targets, and they could lead us in first instance between 106 and 104.5. They are now quite oversold, so we could expect a bit of a rebound here, but overall the trend is still heading lower. So still in a bear trend on the weekly chart, still in a bear trend on the daily chart, a bit oversold on the hourly, but this downtrend should continue. Let's now focus on dollar-yen. Similarly, dollar-yen has 3 bulls or 3 potential uptrends, and it says potential continuous uptrend. So the dollar is still meant to be strong against the yen. The weekly chart is looking at impulsive 2 targets, which over the next few quarters, there's some time left here, could lead us up above 130, possibly even up to 140. At the moment, following some exaggeration earlier this year, the risk index has gone in the middle of the range and should start moving up again. But it's not yet overbought, so there is some leeway to move higher. So still an uptrend, an extended uptrend, but we still have potential over the next few quarters. The daily chart is also heading up. There's little time left here, but we still have some potential in the price targets, possibly above 125 and maybe in the direction of 128. The risk index, following strong exaggeration in the oversold territory here 2 months ago, has now rebounded but is not yet overbought. So we believe there's still strength in this move and that over the next few months it could move up into the target zone. Finally, in the hourly, we did reach the targets a few weeks back. We have now been consolidating. The impulsive up is meant to be done, but it hasn't turned down yet, so we do have to keep a positive stance here. The risk index, which was overbought, has consolidated and at the moment is trying to move back up, possibly to reach the overbought zone over the next few weeks. Here it's probably a good idea to have a stop loss, and we would put it below the lower end of our envelopes, so possibly in the direction of 121. So as long as we stay above this 121, we wouldn't think that the hourly uptrend is in danger, and in the perspective of a daily uptrend and a weekly uptrend, we're still in a potential continuation uptrend. Now with gold, all 3 bears, so still in a potential continuous downtrend. We've been negative for the better part of almost 3 years now on gold. We still believe that the ultimate targets are in the direction of the 1,000 level. These could be reached over the next quarter or so. we are not in oversold yet, so it's a continuation downtrend for now. On the daily chart, we just saw a very strong sell-off. We're now in the oversold territory. We could see a slight rebound here, but all in all, the targets still have some leeway to the downside, down possibly to 1030 over the next month or so. Finally, the hourly is well extended. The impulsive down have been done. We are in the oversold territory, but we haven't turned yet. So at the moment, the 3D market positioning bar box rightly tells us that we are in a potential continuous downtrend. Finally, on equity markets, we were still bullish the last time around. We did warn of a slight consolidation. It was quite strong, as you can see on the hourly chart, but the bounce back was also very, very quick. We are back towards the higher end of this target of this price range, and possibly not too far from the all-time highs. So in this respect, at the moment, we still believe the weekly chart is in an uptrend. The impulsive up is done, but we could expect our extended impulsive 2 targets to develop over the next few quarters. So we would remain constructive on equity markets over the medium term, so over the next quarter or so. We do think we are in an extended market. You could see the exaggerations here with both our envelopes touching each other and our risk index in the overbought, but we don't think this move is quite finished yet. On the daily charts, we've had a rebound from the lows back in August and September. Our impulsive targets are now well in place, and we believe we could reach the 2150 to the 2235 level over the next few months. The hourly, which was a bit extended, did correct, but it's now bouncing back pretty quickly. We do believe that over the next few weeks, we could make it back above 2100 and possibly up to 2150. And that's all for today. Thank you very much.